The markets in Bitcoin are heating up today. Could it hit all-time high by Q2? Today we'll break it down for you. My name is Paul Barron. Welcome back into Tech Path. Let's get into it. I do want to thank our sponsor today, and that is Coinbase. Coinbase is a great place for you guys to get started in your crypto journey, and I think there's a lot of people now starting to move into crypto for the very first time. Well, this is the place where you want to set up your account, go in there, make your first trade. You can actually transfer money in from your bank. You can put it into USDC or go directly into a digital asset, whether it's Ethereum or Bitcoin, whatever it might be. Lots of assets to choose from. The future of money is here. If you use our link, you're going to get up to $200 in crypto to get started. So check it out. Let's go over to a couple of topics today. This, I think, was the biggest news of the day already, and that is Standard Chartered has said that Bitcoin will hit all-time high by Q2. And that'll be interesting if we see that kind of movement. Firm is now saying that the leading cryptocurrency is set to target around 120. Let me zoom in on that for you guys. Amid its recent performance, and of course right now we're trading that mid-90s range. I think the key here is really a lot of the narrative that has been placed around the macro. Remember, we still have in the month of May a Fed meeting, and we still have a lot of situations that are occurring around inflation. But at the most part, I think tariffs and possibly the impact of those may be on the latter side of things in terms of have we got past the worst part of it. And that could be a big indicator. Bitcoin above 94 on May 2nd, coming in from Polymarket right now, and that is around a 50-50 chance. So holding it about 47% right now as we record this. By May 2nd, let me know in the comments down below. Do you think by early May we will see above 94K, or do you think we'll see a little bit of retracement on Bitcoin? Let me take a look at one thing that's happening out there, and that is Coinbase is targeting a 4 to 8% return with their new Bitcoin yield fund. And remember, though, that this is only available for people outside the United States. Great. But the point is, this is still a lot of a return guarantee that's coming in, and especially from someone like Coinbase. This could put them at odds with some of the best houses out there and exchanges out there in being able to get some market share outside the United States. That in itself is a big plus going forward. All right, so another thing that's happening in the markets this week is the Mag 7 earnings, and of course you've got Tesla. Their miss on EPS and revenue guidance. Alphabet did beat, and Microsoft coming in on Wednesday, Meta Wednesday. Thursday is Amazon, and then Thursday also is, of course, Apple, with NVIDIA hitting also on Wednesday of next week. So we've got a lot happening, guys, in terms of where we're going to see the current market and the Mag 7. And I don't know, the key here, I think, is are we going to be looking at liquidity coming out of, the traditional markets and start to move into some of these risk markets? I think that is the thing that everybody's watching right now. You also look at U.S. Treasury Secretary Bessent, who says he's a bit surprised that markets rallied after his comments about de-escalation with China, because he basically says we didn't say anything new. It's really up to China to de-escalate. I don't know if I agree with that, but I want to play a clip for you that'll go into a little bit more detail on this de-escalation. Take a look.
Well, Andrew, first of all, to clarify the meeting with JP Morgan, there was nothing that I said in that meeting, nothing that I had not already said in the mainstream media 72 hours before. So I was surprised when the market rallied. And if you were to look at what happened after the meeting, after I sat down for a press conference, markets sold off. So if you bought during the meeting, you actually lost. To get to the meat of your question, that it's a complicated relationship with China, but it is my belief that which is unsustainable will not be sustained. And again, the Chinese business model is predicated on selling subsidized goods into the U.S., and it's just not a long-term business strategy for them. So I am sure that they will come and want to de-escalate.
All right, so whether that is going to happen with China, the key here, I think, is that maybe Trump and the administration have started to say, all right, we're going to flex a little bit. We're going to start making deals that are going to be good for their countries, other countries, as well as the United States. That is the key point I think a lot of people are trying to get to. And whether or not it's us coming to the table or China, that I think is going to be maybe negligent to a certain extent. The question is, do we actually get something out in the open and a trade deal coming? I want to play this next clip that kind of points to us versus China that should come to the table. Take a look.
Is it up to China to come to the table?
It can't be. We kind of started this war. And my fear, Sarah, to your point, is that they just are going to be able to absorb so much more pain than we will be in this process.
Why?
Well, first of all, their government controls everything, right? And so they really do have an authoritarian regime. President Xi isn't coming up for re-election. They culturally think in multi-generational timeframes, not 2-year election cycles. And so, my fear is that even if the administration, the president is right, and this is a way to reshore domestic manufacturing, are we going to have the patience to get there and wait them out? And my fear is, frankly, China is going to be much more patient than we're going to be capable of being when U.S. consumers find the shelves empty and prices going up.
All right, so we'll see if that occurs. Are we going to truly see shelves empty out there in the sense of, the items that come in from China? Let me know what you guys think. If this, do you feel is going to have a major impact on your lifestyle or not? Now you have to look at some of the deals that are being made. This was a statement by Bessent just today, and he's basically said, hey, first trade deal might come as early as this week. If that occurs and we have some sort of major win this week, and I say we, the United States, has a major win on tariffs, this could be very positive for the markets. Could see another leg up here, both on the traditional stock market as well as with Bitcoin and maybe even some other of the selected assets in the altcoin side. But I want to go to another clip right here, because this is one that came from the All In podcast, and they have an interesting take on this, and there are some varying opinions on how the market is being affected. But take a look at this.
And there was some percentage of the market or some probability that people were assigning to the fact that this administration could be crazy enough to tank the global economy by leaving tariffs really high and letting this kind of run. And I think that that's kind of being taken out of the market.
Right. But now that it's out of the market, that means that the leverage, there's less leverage. There's less leverage in the conversation. And if the goal is to...
No, that's not true. That you're saying a critical thing, and that is not true.
Well, hold on. If the goal is to effectively pressure China, which I think is the ultimate goal, I think as the bond market has spoken and as Trump and Bessent administration has said, okay, we understand where the floor is here, what we got to do. I assume if you're Mark Carney, if you're the EU, name your place, India, Japan, you say, I'll make a deal with you, but if you thought I was giving you the world before, no. You need me as much as I need you. And you seemingly need me even more now.
So the part where I agree with you is that last part. We've gone from -2 to maybe +1. And China's gone from +4 billion a day to maybe 0 or -1. And I think that's what instills the leverage that is required to get the deal done.
By the way, I think long term, America's got leverage here. Everybody wants to invest, is ultimately going to want to invest in America, including China. There's no question that we have the advantage on a long-term basis. The question is, do we have the patience?
Well, that's a good point, too, that Sorkin is making there, is do we have the patience? Because it is usually going to have to stretch across multi-administrations. Now, many people would say, well, look, J.D. Vance is most likely going to be the candidate for the next presidential run. We could see another 12-year cycle moving into the Republican side that would have at least some presence around this same concept around putting pressure on China. That, I think, is going to be a big part of how the negotiations could also look. That could be at least in the sense of, yeah, we're willing to go much longer. We think we can hold this. And if we continue to put pressure on it, is there going to be support from the United States voters? And I think that's the bigger question going forward. The other thing that you have to consider right now is Bernstein taking a look at this, saying Bitcoin is primed for new highs, a lot of corporate accumulation, and ETF supply squeeze is going to intensify. And I think this is something that I agree with. I'm starting to actually see this in action. So here, a quick story. A couple of CEOs, high-profile CEOs I talked to last week, and we had this conversation about, should I put Bitcoin on the balance sheet, and should I maybe consider some USDC or stable coins, be able to go into that narrative and earn some yield on that. There are a lot of structures in which now companies are actually considering these moves. And if it does go through, then I would agree with Bernstein. I think this is going to be a big one right here. The expanding corporate accumulation race and returning exchange-traded fund inflows, which we're already seeing, are good indicators suggesting that we could see a supply squeeze. I don't know that that would necessarily be the case, but it could be. And if it is, then yes, we will see an all-time high by Q2 or in Q2, much like what Standard Chartered is talking about right there. Another point I want to hit on right here, the S&P can rise another 1.5 in the next 3 days and erase all of April's losses. It will be the first time since 1950 stocks have been able to fully recover from a 10% monthly loss. And you got to remember, we've seen both media presentations over this last several weeks that this is the end. You know, we are going to see, you know, the stock market completely disintegrate, and we're going into a recession. Now, I granted, I don't know that we're out of a recession scare yet. I think there's still a lot of pressure here from the economic side of things and also the macro component. But the fact that we've been able to erase those market percentages, now granted, there's not a lot of liquidity and a lot of volume that's flowing through the market, but that is the key factor here, is that it has already returned. Now, the question I have is, was this a great just buy the dip moment? And many people are taking a look at, we got in, and should you continue to get in is the real question. President Trump says when tariffs cut, many people's income taxes will be substantially reduced. Now, this is a wait and see for me. If Trump follows through on this and we see an actual tax reduction, especially in the under 150K employment sector, that will be a massive shot in the arm toward, yes, they believed in what was going on. And the question is now, does that tax offset the cost that the inflationary scenario could be playing into this, even though that could be still, you know, somewhat transitory. But I think all of this plays out over the next 12 to 18 months. And of course it has to, because we're moving into a midterm that will be highly affected by how Trump's administration is performing right now. I'm going to go to a clip real quick, because this is where it gets interesting in reference to just the overall classes. When you think of the economic classes out there, a lot of people in the upper class have not necessarily had pressures. Maybe that's changing now. Take a look.
Researchers at Bain & Company say the consumer outlook score for upper-income Americans earning $100,000 a year or more had its sharpest drop in April, and it is near its lowest level in 7 years. Now, a separate report finds about 2/3 of upper-income earners, 67%, say they are stressed about their finances, and that's according to the CNBC SurveyMonkey Your Money poll. And 69% say tariffs are causing them financial stress. As a result of tariff news, 1/3, 33% say they have delayed or avoided purchases, and 14% say they've stocked up. About half, 52%, have made no changes. What's interesting is how many more people with that income level compared to those who are 50 to 100,000 or 50,000 or less are now saying that tariffs are negatively impacting their finances.
Yeah, it's hugely regressive for people who are spending most of their money on a week-by-week or month-by-month basis.
The other thing that's interesting is how many people believe that we are headed for a recession.
I wonder when that becomes a self-fulfilling prophecy.
Exactly. And again, these are folks with the most discretionary income. What they're seeing in middle and lower income is middle income are using a little bit more debt, but lower income are saying we're going to be able to be okay because we're going to use debt to finance everything. That's very scary.
Wow.
All right, so a lot of things to unpack there, and I think some of this is right now is a real consideration that we are seeing, you know, upper income individuals that are finally starting to see a little bit of the pressure. But I think the real point you have to look at is the fact that are we really seeing the differences in places that you spend the money? So I think you have to consider that. A couple of research pieces that we had done last week was still showing almost an all-time high of consumers still going out there doing a traditional shopping. Now, is there a supply chain that could be affected, especially with some of the things that are happening within China? Yes, there could be. Would they shift their funds to something else is the question mark that I think a lot of people are asking. 60% of CEOs now are expecting a recession in the next 6 months due to tariffs. CNBC coming in on this. And I will agree with this. As we talk with a lot of CEOs and brand leaders in other industries, especially in the restaurant space, this is one of the big factors they are concerned about, and that is that the consumer spending power may not necessarily be weakening. It may be that they are starting to stockpile their spending power, looking at maybe going after some wealth-changing alternatives. And what I mean by that is, remember, in these kinds of times, there's going to be deals out there and all sorts of things that maybe someone that is starting to look at that and say, I'm going to maybe try to go in and get a piece of real estate or go get that car or whatever it might be that I'm looking for that could be actually coming down in price due to this pressure overall. So there are some factors that I think could play into that. Whether or not we see a recession, a lot of macro numbers still have to point at considerable amounts of reduction in GDP, which is, pretty much the definition. And we'll see if this actually happens right now. Americans now are expecting inflation to soar 6.5% within the next year, highest reading since November of 1981. This will be a huge deal if this happens. And I think that's the question is, will we see this kind of acceleration? Our next inflationary print coming up just here in a few weeks might give us a little bit of indicator, because remember, last print we had, it regressed some. So still looking pretty sharp right now. Another thing right now you got to look at in terms of the market is what's happening in DC this week in Congress and crypto. Entering a pivotal period, we'll see stablecoin bills waiting for a vote this week. Also, the market structure legislation will be releasing soon. And then Trump is, of course, calling for all of this to be done before August, which is a big deal. Congress is tied up with a lot of macro issues at the same time. One other thing that Ron failed to mention there is the tax bill. And that also could be lining up for an approval later in the summer. All of this coming down into that August time period. So a very critical time as we start to move in. Remember, the market's always like May. Is it one of those all-time high opportunities where you sell, step back, and wait for it? Or will we continue to see some volatility, mainly because of the regulatory scenario that could be playing out into June, July, as August could be the deadline for Congress going forward? Other things that are happening this month and next is, of course, Token Dubai. Token 2049 in Dubai is coming up. This will be another major event where we're going to see probably a lot of announcements, and you will consider announcements from almost every major chain out there. One of the big ones that we're watching right now, of course, is SWE. We've talked about them before. They are having their Basecamp project. This is a channel partner, by the way, and they're doing this in Dubai at the same time. From what I'm hearing from them is there is going to be a major announcement at that event. So stay tuned. We'll be covering that also, along with more news coming out of Token 2049. Don't forget, next week or next month, we have the XRP Vegas event. You also have Solana New York, and you have Bitcoin Las Vegas, all happening in the month of May. So a very interesting time for crypto as a whole. Market participation has been weak despite the recent rally. This is something that everybody needs to pay attention to. Share of the S&P 500 stocks are trading above their 200-day moving average, currently standing around 30%, but by comparison, this year's peak was 57% in February. So big difference here right now. Additionally, the share of S&P trading above their 50-day is only at 32. All of this while the share of NASDAQ 100 stocks trading above their 200 is at 36, still half of the 2025 peak. So it still has a long way to go yet for us to see a full recovery. I know this has been a definite market correction to the positive. My question to you guys is, do you think we're out of the woods right now? Let me know in the comments down below. Let's go over and look at the charts real quick. One thing to consider, I'm looking at the daily on Bitcoin right now, and this was a pretty significant move over this range right here, which went all the way back to the 10th of April, up almost 29% right now as we're trading today at about 93.8. But here's the thing, when you see those kind of rises in some of these situations, it could put a little bit of pressure on the market. We could see a little bit of a retracement. Will it go back down to where we saw it here recently at 75K? That is the question mark. It's the $75,000 question is, do you get a chance to dip back into Bitcoin at that price? Many of the experts out there, I've been watching quite a few of the guys who come on our show who are very big in Bitcoin, and I won't call them maxis, but they're very astute to what's happening in the Bitcoin community. They're saying not a chance. We are beyond that now. So if you get a chance, because you missed this run from 75K, do you dollar cost average? I think that's the angle in which you have to take to kind of stay with this market as it's going. And do we get an all-time high in this Q2? If that happens, guys, we're talking 120. That's still a lot of juice left to be squeezed. So let's take a look also at Ethereum holding at a 1765 after it had eclipsed almost 18, a little over 1800 over the weekend. SWI, of course, has been up and still holding after a big run right here over the last several days. Let me know what you guys are trading right now. What is it that you're getting into? If you're going into crypto, altcoins, Bitcoin, ETH, are you going after possibly some Mag 7s looking for these earnings? All of that, drop in the comments down below. If you're not in the Diamond Circle, get in right now. It's a great place to get additional content. Follow me out there on X, at Paul Barron. We'll catch you next time right here on TechPath.